We're going to talk about 5 stocks that have never been talked about on this channel before that are on the list of stocks that are at 52-week lows. This is actually a great list of stocks that everybody knows, but that doesn't necessarily make it a really good investment. These stocks are down massively, but in the past, we've seen some awesome hidden gems that fall into that same range, like an Nvidia, like a Meta, and others. So I'll tell you if I think there's a massive opportunity at these lows, or if we're in for a lot more pain. Just make sure you like the video if you like getting the truth without the hype. Now, just keep in mind, just because these stocks are at 52-week lows, or even if we're talking about 52-week highs, I could care less. It doesn't freaking matter. What matters is valuation. There are plenty of stocks that are at 52-week lows that are an absolute screaming deal. And then there's other times when they hit 52-week lows and they're terrible deals, still overvalued and have a lot more to fall. And the same exact thing whenever they're on the highs as well. So don't let things like this or a list that people put out and such where they're talking about 52-week highs or 52-week lows discourage you from either buying at a high or encourage you to buy at lows when, wow, there's a lot more to these lows than just the stock being low and Wall Street being dumb and buy the dip and all that sort of stuff. And actually, the last stock we're going to talk today, I've never talked about before, and it opens up a much broader discussion about a type of investing that's out there. So we're going to have that discussion today too as well, because it is a very, very divisive topic with very differing opinions on it. So I'm going to give you guys my opinion and kind of give you some things to think about. So stock number 1 is Nike, and it's down 12% year to date. Now with this stock, you guys know I love Air Jordans. I don't know if you're a kid that grew up during the time I did during the 80s and 90s. That was, that was the sneaker. Probably still is the sneaker in a lot of ways. So putting that aside though, that has nothing to do with investing. And when I look at investing and I look at this stock, the problem is profitability. And of course, what happens when you have profitability problems? It also means that your valuation is going to go up and get more expensive. Basically, your stock is going to look more expensive because your valuation is based upon that EPS number. And that number is not doing well for Nike at all. All I need to look at is basically the valuation of it. And Nike's trading at a 27. And then you have a stock like Meta trading at a 25 right now currently. So you can see Nike is priced more expensive than Meta. But yet, I don't know anybody who would say who has more growth in the future, Meta or Nike. I think that's undeniably Meta. Who has who's more profitable to begin with? Of course, Meta, way more profitable than Nike is. Who has more future profitability, more profits to pull from, Meta or Nike? Of course, that's Meta as well. I'm not sure there's a single metric I can give the edge to Nike on as opposed to Meta. So that right there just kind of tells you in regards to valuation, how cheap or how expensive one or the other is trading. And the other problem that Nike is going to have is they are physical retail. And whether we like it or not, whether we think it's fair or not or anything else, the reality is physical retail is dying. I don't think it's going to die completely out, but these companies have got to figure out how to get more profitable in an environment where it is more and more expensive to operate in a physical environment. And of course, more importantly, people are shopping more virtually than ever. And again, that's going to continue. That trend's going to continue. I don't think any of us thinks that's going to slow down. Those are problems that Nike has to solve and put the bottom line. They can't just cut staff. That's kind of like a Band-Aid, on top of a huge bleeding wound there. You need more than that. You need to kind of basically revamp how you do business. This is not an easy turnaround like a tech company is, where you just cut a bunch of jobs, make a few tweaks to your business model, and bang, you can instantly squeeze out a ton of profits on the other side there. It is much more difficult than that. So for me, I'm completely out of this one because not only are they having profitability problems, but I'm not necessarily sure that the growth rate's going to be there in the future as well. And they got business problems that they got to solve as well. Declining financials and valuation going up is not usually the scenario I like to buy into. So stock number 2 is Boeing, and it's down 31% year to date. Okay, I apologize. I said it, but we have talked about Boeing before. I apologize for that. But Boeing, we all know about it. They've been having problems for years now. They cannot seem to, I don't know, it seems like there's a new whistleblower every other month, it seems. Seems like they uncover more and more things, and I don't think that story is done yet. I think there's a lot more to uncover. I think there's going to be a lot more federal investigations. I just think there's a lot more downside coming in the short term for this particular stock. And then add in the fact that their their competitors are eating their lunch right now. You're seeing it quarter after quarter, that gap growing wider and wider and wider in regards to orders and flow moving to their competitors versus themselves. And it looks like that's accelerating. That's not, going the opposite direction there. So those are all kind of signs that, hey, Boeing could be in for, some pain for the very long term. Now, I don't think they're going bankrupt. I don't see a world where we don't have Boeing there. It's not like other businesses where you can just stand up a airplane manufacturer tomorrow. It's not a tech company. That's very, very hard to do. So I don't think they're going anywhere in regards to bankruptcy or anything like that. Now they might do a bankruptcy restructuring type thing. I could see something like that. They're not close to that either yet, but I could see that happening in the future if they continue to struggle. But I don't see them just flat out going bankrupt and not existing anymore either. So until we basically know all the ugliness, all the skeletons in the closet per se with Boeing, and we have an actual turnaround plan from management that they can execute to, this is one I just have no reason to even take a cursory look at for now. I'm going to wait and see with this one. Stock number 3 is BristolMyers Squibb, and they're down 15% year to date. Now, my initial look was, wow, EPS was terrible. Huge miss from last year. Huge, going from billions of dollars of profit to billions of dollars in loss over the span of a year. Looks really, really bad. But there was actually a one-time hit that kind of went on there that kind of created that there. So that calmed my nerves a little bit, but it's still something that I still see there are business problems with this particular stock. And you can look no further than they're expecting revenue to continue to decline, not go negative, but the revenue growth rate going negative while you're seeing pharma actually increase. So the growth rate in terms of revenue for pharma is going up, but then they're seeing the revenues decline in terms of growth rates. So that is a problem with the stock. And of course, on the last earnings call, they adjusted guidance down, which we all know that is kind of like the death knell right now for your stock whenever that sort of thing happens. So one, you guys know I don't invest in pharma because it's outside of my circle of competence. I don't understand it well enough to be able to accurately understand the business model and to be able to make accurate predictions in the future. But just simply looking at a stock valuation standpoint and looking at the stock itself and where it sits currently and kind of where the trend is, this is one I would want to see some sort of actual tangible evidence of a turnaround before I actually even thought about investing in this particular stock. Again, it's pharma, so I have no interest at all. But even if I was interested, those are some things I would want to see and I would want to understand intimately before even thinking about putting my money there. So stock number 4 is Zoom, down 10% year to date and 88% from those all-time highs. Now, we all know why it rocketed up. Basically, the world shut down and it was the only way to do business. I know for me and my business, it absolutely exploded with this as well and able to use this as a tool in order to make things better for our clients. But we all know why it boomed up, right? Lockdowns, can't go anywhere, got to still conduct business. Obviously, you're going to lean on the solution that was the easiest to implement and that was already out there and ready to go. That was Zoom. But we also know why it's fallen because, hey, when people actually do go back to work, even though they're not going back at the same number they were prior, that's all revenue that's coming directly out of Zoom's bottom line. And more importantly, competitors have caught up. There are other alternatives out there to Zoom that you can use in order to actually conduct your business meetings and everything else. And unfortunately, it's almost kind of commoditized to a degree. So the question becomes, is there more growth in this stock at all? Is it still a growth stock at all? Or are we going to continue to see the business continue to erode instead? And when you look at not only what guidance is, but what Wall Street's estimates are as well based on that guidance, the answer to that is no. There is basically not a lot of growth there at all. Basically, you are looking at old man style growth in a stock that's supposed to be a growth stock. That is not a good dynamic at all. And I'm not just talking about revenue growth. I'm talking about, profitability, EPS growth as well. Both of them, the growth rates are just stagnant. There's really nothing there. And that's a problem when you're a growth company, that's a tech company, and you want a tech multiple, but yet you're growing like an industrial old staple that's been around for, 150 years. That's a major problem for the business. So when I look at this, I not only don't like the valuation, I don't like the growth that I'm getting for that valuation. And so for me, until there's a significant change of some sort with the business model, this is more than just cutting headcount and things of that nature. Those are things you do to kind of gloss up the number short term there. I need something in terms of what's going to actually grow the business on the other end, not what are you going to cut in order to make it, in order to make EPS look a little better. Now, I don't know what the future is, but this is the exact setup you see whenever our company gets taken over, or they're one of those legacy style tech companies that just kind of stagnates and kind of does nothing for years and decades on end. Unfortunately, that's how this setup looks. Now, obviously, we don't know the future, so maybe they have some new innovation coming. I'm not talking about smaller things that kind of add on to Zoom and things of that nature. I mean, something massive that's going to change the game again for Zoom. Maybe there's something there, but otherwise, I don't see it right now. So this is one I'm not willing to buy and pay a tech multiple for something that's going to give me the growth rate of an old man style dividend stock. So I'm staying far away from this one. All right, so on to the controversial part of the list here. And this last stock we're going to talk about here, it brings up a great topic that I know I've discussed in my group, but I've never discussed it here in person. So let's talk about that next. Which for just $15, you can jump in on the $250 stock portfolio challenge, where I'm going to use $250 weekly and turn that portfolio into a six-figure portfolio in real time for you. So if you want to see those buys in there specifically, exactly how I build that out, make sure you check out the pinned comment down there, and also check out full membership. If you want to take 5 courses for free, use our stock analyzer tool for free, take advantage of the free coaching, have access to me anytime you want, slide into my DMs, jump on our live Q&As. We have so much in the group and so much more coming. Make sure you check out the pinned comment, see if a membership's right for you, because we only have limited spots for that $15 spot. And once they're done and gone, they're gone forever. So make sure you get your spot before it all expires. All right, so on to stock number 5, and that would be British American Tobacco. Now, this brings up a great discussion about sin investing or ethical investing, or, there's a lot of different terms for it and such. And my thoughts are, I don't have any problem with folks that want to do that. What I have noticed a lot though is certain folks will invest and say, "Oh, I don't want to support that. I'll support this instead." And a lot of times what you don't understand is you don't understand the skeletons in the closet of what you actually are supporting as well in regards to that. So there's a lot of very clear sin stocks, like tobacco stocks, like gambling, things of that nature that are just, alcohol stocks, whatever, where you can very clearly, tangibly see that's what they do. And then there's a lot of other stuff that, hey, I want to only invest in green companies, not realizing sometimes you invest in green companies that actually aren't that green. Or I only want to invest in companies that support this particular political side or that particular political side, without actually understanding that, well, a lot of cases they actually, donate to both political sides. So, and more importantly, a lot of times when people put whatever ethical thing they put in front of themselves, sometimes you're limiting yourself from the best companies possible and taking on lesser companies in order to try to meet this ethical standard, which is okay. I don't have any issues with that. I agree you shouldn't put money above all else. Agree 100% there. But what I've noticed is when I've gotten into these discussions, especially in my group, I'll ask for what do they feel are ethical companies, or companies that, why is company X, not on your list? But then you have and then they tell me company Y is on their list. And the reality was, a quick Google search revealed, oh, actually they both do the same thing. So, it kind of blows up their thesis per se. So you got to kind of be careful with that sort of talk. But I 100% understand not wanting to support certain stocks. Just like for me, I'm just not a supporter in tobacco. I just don't see the good in it. I understand some people use it. Hey, it's their right to do that. But in regards to investing, it's just one of those deals. I'm not going to support it for a variety of reasons there that are personal to me. However, having said that, even if I wasn't against tobacco, I still wouldn't invest in this company because the rate of tobacco use is going down every single year and has been for a very, very long time, which means this is a dying business. I don't think it ever completely dies, but there's nothing there that tells me I want to own this stock because it's a great stock long-term or a great dividend, strong dividend player, whatever the case is. The reality is you're in a dying business at this stage with this particular company, so I want no part of it. And remember that $15 tier is almost full, so make sure you get your spots before they fill all the way up and it's no longer available for you. If you want to watch me build out a portfolio with just $250 a week and build it to 6 figures and beyond that number, make sure you check out the pinned comment down there and get your spot, or jump all over a full membership that is on sale right now where you get access to everything that we have there in the group. Direct access to me. Again, you get free courses, free coaching. You get to be a part of the best 6, 7, and 8 figure Discord out there. You see all my buy and sell alerts in real time. See my complete watch list with price targets. See all of that information, guys. It's all in there and even more. Check out the pinned comment, see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.